All right, now let's take a look at global stock markets, where markets were trading lower amid China's COVID protest over its continued zero COVID policy as infections surged across the country. With that, let's start with Asian indexes, where markets were mixed on Monday, with Hong Kong leading the losses in a negative Asia-Pacific session. So on Monday in Japan, the Nikkei 225 was down by 0.42%. In Hong Kong, the Hang Seng Index was down by 0.69%. Meanwhile, the Singapore Straits Times closed marginally in the green, up by 0.08%. All right, from Asia, let's now move on to the U.S., where markets were mixed last Friday after closing earlier due to the Thanksgiving holiday. All right, so on Friday, the Dow Jones Index was up by 0.45%. The tech-heavy Nasdaq, however, fell by 0.5% to the S&P 500, hardly changing but still closing in the red, down by 0.03%. Right, so all three major composites ended last week higher, even with the shortened trading time due to the Thanksgiving holiday, as stocks were lifted during the week by comments from the Fed that signaled an ease in its aggressive rate hike path as inflation cools. All right, from the US, let's now move on to Europe, where markets were in the red early on Monday. Well, here are some of the market numbers in Europe as of 8:41 a.m. London time on Monday. At that particular time, London's FTSE 100 was down by 0.4%, 0.47% to be exact, while in Germany, the SECHA DAX was down by 0.21%. European markets retreated as COVID protests in China continue, investors continuing to monitor the unrest. Now, over in the U.S., real holiday sales are likely to decline 1.2% this year. According to Standard & Poor's Global Market Intelligence, holiday sales will grow a solid 4.5% in 2022 from the last year, but real holiday sales will decline 1.2% after adjusting for inflation, the Financial Corporation predicted in its recent report. Now, the prediction echoed the data of the U.S. households' credit cards, showing low consumption potential of ordinary Americans in the traditional shopping season. Now, data from the Federal Reserve Bank of New York showed that U.S. household debt increased by $351 billion in the third quarter of this year, of which the credit card debt balance increased by 15% from the same period last year to $930 billion, the highest growth rate in more than 20 years.